Okay. For all of you who come on time, thank you very much. I am going to wait a couple of more minutes because I have to set a tone for our conversation today. And this is purely resulting of a few investments that have happened in the past. And some of them have been with me for a nice 12, 14, 15 years. And somehow it is of the opinion that if Sharath is recommending something, there is no way we'll lose our money. And each asset class, unfortunately, has its own risk appetite. And given the fact we are living in a very time press world, with being everything. Okay, who was that? Sorry. May I request all of you guys to please mute your lines for me? Thank you. So I have to set the expectation, and therefore I need a few more folks to be on a part of this call so that we can filter the audience right off the bat. All right. Now, while we are doing this and when doing a little bit of short talk, give me very quickly what are your hesitations or what are your restrictions or what are the pain points that you'll see with this investment?
Exit criteria. Exit is the main concern.
Thank you very much, Kavita. I'm glad that you're setting tone for it already, like in the morning as well. So thank you. What else? Okay, Meghna, Krishna Kumar, Gautam. Sorry, Gautam is from our team. Anand, Funny, please share your videos. It is important we have a face-to-face interaction. This is the closest that we can get. Thank you so much, Funny. Folks, I'm very serious about the video being turned on. It is nothing different from a one-to-one call that we have. Having a group call means nothing that we can have our videos turned off. I'm sorry about being a little stern on this. It is important. And like I'm saying, you could be anywhere. I would not judge you. Whatever you're doing, I would not interrupt. But it's important we have a face-to-face conversation. This is the closest that we can get to an in-person meeting. We're talking about investing 25 lakhs. We're not talking about investing pocket change. So it's important we have a face-to-face discussion. All right. So Kavita says the discussion challenge with this is the exit criteria. Anybody else? Any other pointers that you would like to share?
Chandra, Sharath, I think the commercials, the 12% carry that they have plus the charges, right?
Not a
So
problem.
I don't know what is equivalent in the other, angel groups and the AFs, etc. So is it really viable from the
I hear why you're asking the question, Urvil, because you've been introduced to me by a common friend, and they are running another platform where the charges are not as much. So I get it, right? And thank you for bringing that up. Let me see. Devendra, Kaushik, KK, Gunjan, please have your videos turned on.
And Sharath, can we negotiate on?
No, that's not happening. And I'll tell you, it's not because we are doing a side deal. It's a SEBI Cat 1 AIF. They cannot have different terms for charges and everything. Everything is predefined. It cannot be different. Most of the time when I introduce products, I'm generally the largest contributor, but I'm nowhere when it comes to IPV. IPV, just to add pointers, they have 3,000 registered participants on the platform paying a platform registration fee on a year-on-year basis. Whether they're investing or not, that's a different story, but they are paying for it. So
are there any competitors with which we can compare them?
Oh, Number one. Absolutely. So Kavita, because this is coming too often, I'll address this right off the bat. Folks, give me a second. I'll address this point and then stop the recording because I have to share a few things which may not seem very pleasant or my usual style of speaking. So Ram, KK, please turn on your videos. Okay. So Kavita, like I was just saying, your question came in because other platforms. Now, how many of you think Sharath as a financial advisor does a pretty decent job? I mean, if you're not, say it's okay. If it is yes, then please show me a show of hands. Thank you very much. Now, that was a trick question. Sharath, before you all come on board, charges 45,000 rupees. Some of you came in at a very early time, and I don't even tell people that I tell everybody there is a renewal charge. Yes. I tell everybody. Most of you have come back and saying, Sharath, you have not charged us from the start. When are you charging? The intent is not to go about charging because 45,000 in the grand scheme of things doesn't make or break me, right? The intent is to see whether people are valuing the charge or they're valuing the association. Okay. So while there are multiple platforms out there, I will tell you names like Stike. This is sorry, not Stike, Stike. 5,000 rupees is all they charge. You will not get in touch with the person in the support team, even if you do multiple messages. Take my word for it. In fact, don't take my word for it. If you can multitask, go on the platform, TYKE. And over the next 1 month, if you get a response, then I'll probably, apologize to you. 5,000 is all they're charging, no entry, no exit. Now, do you want to deal with a company? Like, for example, some of you are on this call whom we've done medical insurances for, term insurances for. Have you all seen the process, how difficult it is? We ask you all questions on a recorded line. Why do we do it? Are we interested in giving you insurance? Are we interested in making sure the claim goes through? So if the claim goes through, the entry process will be difficult and there will be a charge and time. I'm seeing for a name that was possibly here. Okay, I don't see the gentleman here. They were like, Sharath, when I did this before, I didn't have to give my all these details and the insurance claim, insurance went through very easily. It's when the claim comes in, that's when the problem is. So let us understand something. Every platform that I'm presenting to my audience is not done with an intent for you all to buy. It is not a convincing mechanism. It is a clarification mechanism to very clearly understand what you're getting into, what kind of risk appetite you have, and whether this is something that you should consider or not, keeping your liquidity in mind. All right. So I am going to stop the recording right now or not stop. I'm going to pause it right now. And the reason for that is because I'm going to be asking some hard-hitting questions, which I don't want folks who are going to be listening to this in the future, think of otherwise. So I'm pausing the recording. And for the last time, everyone on this call, please turn your videos on. It is a face-to-face discussion. We are not going to say this again. And for all of you who are doing it, thank you very much. All right. With that said, pause. So I've started the recording again. I am going to be, switching between screens to make sure that I don't miss out on anything. So first of all, can you all tell me why are we investing in startups? What got you to even get on this call, in spite of the fact that we've said startups can get very risky? Please share. Unmute your line, share, no problem.
Returns are very high, and it does definitely add to diversification of our portfolio that way, if we do it intelligently.
Thank you, Kaushik. Very nice. Okay, returns are high. Do we know what number is with IPV? What is the IRR?
44 something, right?
Very nice. Awesome. Very nice, Kaushik. Okay, anything else? Why are we looking at startup investing?
At this point of time,
I think India is, sorry, go ahead.
yeah, it's pretty much what you're about to say, right? India is now at the turn where startups are coming more and more, and then that can be a good asset class. Yeah.
Just to let you know, in India, startups have just picked up pace over the last 2 years. It's an industry for the last 10 years. Okay, so it's not as mature as mutual funds. Private mutual funds started in 1994. SEBI came in 1995. There is a regulator that came in there. Okay, just putting points to, you all will get to know why I'm asking these questions. What else? What are you expecting? I mean, why would you consider if the India growth story is so strong for the next decade, where you can make anywhere between 12 to 15% CAGR, and some of you in your mid cap and small cap funds have made upwards of 20% CAGR over a 4-year, 5-year period? Why would you want to risk your money?
Two simple reasons for me. One, my mutual fund portfolio is good,
Who's
and
saying
it will.
This?
Sorry, Nakul.
I'm not. Nakul, sorry, Nakul. Please go ahead.
So 2 reasons for me. One, my mutual fund, the standard ones which we do is growing well enough, and over a period of next 5 to 10 years, where I will think it's very wealth accumulation, that will continue to grow at this pace, which is good enough for me. Then this new instrument of this is something new, and it's better to get onto the bandwagon early enough to get more returns. So the simple answer for me is greed. I want to see 25 is a amount which I can risk, and I want to see if that can be stretched and exponential growth of the money can be taken without absolutely touching the standard mutual funds, which will continue to grow for the next 5 to 10 years. That's the simple answer.
Very well put, Nakul. I'm glad that you answer. See, folks, I'm trying to ask your questions not because I want to extend the duration of our call. We got to understand one very, very strong emotion taken care of, which is investor bias. Okay, read about this online. It will do a significant impact to your investments. Okay, so Nakul, thank you very much for setting the tone. Anybody else? Any other answers? So we've got returns very clear. We've got the fact that it is also downside. Now, for folks who have been with me for 10 years, 12 years and counting, right? You all have seen this journey of an 18% CAGR. At 18% CAGR or 15% CAGR, practically your money has gone up 4 times, quadrupled over a 10-year period. No, sorry, it's gone 3 times. Help me understand why. Why would you consider putting your money in an asset class that, number one, doesn't have any clarity? You don't have a platform to track the values online. There is no certainty who's buying, who's going. There is no daily tracking of this. And for all you know, after all of the time and effort that you've put in, after 6 months, the company could go bust.
Hi, Sharad. This is Mansa here. I think one
Mansa.
thing what I'm looking for is I want to be involved in a startup business somehow, directly or indirectly. And right now, I don't have the capital or the contacts to be involved in a startup business. So maybe this would be one route for me to get indirectly involved and then probably see what the future holds if there is an opportunity for me to consult.
Thank you. Okay, so here you're coming from a learning standpoint because at 25,000 or whatever that membership fee is, at least you've got 12 months of validity to evaluate and see what's the platform culture standard like. Is that correct, Mansa?
Yeah, sure.
Okay, awesome. So, ladies and gentlemen, very clearly, we are all looking for returns, but we have not looked at the downside. So, I'll start this presentation very clearly with whom this is not for and what kind of money should not get in here. Okay. If you are any of the following, you can choose to drop off right now, or you can stay put to the call and then don't invest. But let's get a clarity very clearly in terms of what kind of money and who should get in. So that said, if you are any of the following, which is if you cannot see losses, if you cannot deal with uncertainty, if you are planning to be a passive investor, what does passive investor mean? Like how this raga is going on, mutual fund sahi hai, karte jao. And for those of you who have been doing SIPs for the last 3-4 years, when the markets were as flat, we all know how our emotions were. So I'm not going to pinpoint. But if you're choosing to be a passive investor, which means every month my money keeps getting debited and I should not bother, don't look at this instrument. All right. Next, if you're just trying and testing, if you want to try and experiment, I'm just trying with 1 or 2 companies, don't start. Don't get started. Right? Don't get started in this. Reason is, like I said, there is a risk, underlying risk for every instrument. With startup investing, it's the number of hits you take. You will make losses on a few of the calls that you will make. But the more calls you take, the more is your success percentage. So if you're coming to take either with putting all 10 lakhs or 15 lakhs or 25 lakhs in one company and swinging for the fences, this is not an instrument that you should look at. Okay, folks who have very recently come in, please turn on your videos. I need to have a face-to-face conversation with you.
I think, Sharon, one reason as well, Sudhaya, that it will help us. It will help us, in progress of India as well, in some indirect way.
No, not really, Sudha. I know where you're getting at, but see, you all know me for long now. I'm religion agnostic. I mean, my stance on religion, country, borders, people, gender, race is neutral. I'm not the kind of pro guy who's saying I'm an Indian, I will invest in India companies. No. My government doesn't care whether I'm from India or not. As long as I'm making money, they want to take. So I'll be very brutal with my money. This is me. You all want to curse me. You all don't feel me nice. This is how my personality is. But I will not cheat. I will not fraud. I will not do something illegal, unethical from people to make quick money. Unlike my governments, whichever they are. I'm telling this on a recorded line. All right. So this is me. Now, the last point that I want to add in terms of who should not be looking at is if you're looking at, having absolute amount of data points, details, like how it comes to a mutual fund. If you're going to be comparing this asset class or any other asset class as how solid, robust, clean a mutual fund platform is, this is not a platform for you. Please understand, mutual funds have been in the market for over 25 years. It's got a regulation. There is a lot of ecosystem where you can get the entire data points and everything coming on online every single time. While there are other platforms, you cannot get it at a universal, you cannot get it at one platform giving all your details. So if you're looking from a convenience standpoint that, I don't need to be looking at multiple platforms, don't get in because it's an inconvenience. Heck, all these new platforms that we are talking about, right? IPV, we're talking Better Invest, we're talking about Giraffe. All of these platforms are, you have to go about tracking your investments on a separate platform. You can't get it on InvestWell. You can't get it on a Money Control. So with that said, I've taken care of the logistics, of the tracking and, other challenges that come with monitoring your investments. So this is part one. Part two to the discussion is we've now going to be looking at advantage IPV in terms of why we are looking at IPV. Now, very clearly, ladies and gentlemen, we need to understand the challenges of investing in a startup. Okay. For lack of time, I'm going to blaze through all of this. First of all, you got to learn how to evaluate a startup, which means, is it going to be making money? Is there a need for this? How about the founders? What the data points that they're saying? Is the numbers accurate? Is there competition analysis done? Everything and anything if you have. All right. So, so there is a lot of time and effort going into evaluating a startup. After that gets done, then you have to do due diligence. Due diligence in terms of what? Legal, finance, operational, founders. This is both at the start and on an ongoing basis when your money gets deployed. Third, you are looking at exit. Who can buy your business? Investing, everybody can go about raising money today, right? Money is not the problem, but making sure you have a profitable exit. That's another thing that we're looking at. Okay, so these are all the challenges. Does anybody have any other pointers to add to the challenges that we're facing with the startup world?
Sharath, one question. Bhushan
Yes.
Here. So my point is that, since I will not be able to devote so much time to really analyze these things, should I say that, I trust Sharath and I go with that?
We will address that, Nagbhushan. I'm glad that you're bringing that up. But right now I'm talking at general as an investment class. Why is this not being available for retail investors like you and me? Okay.
Yeah.
See, all these products was something that was meant only for the ultra HNI families, which means they have 2 crores, 3 crores, 5 crores of net worth, and you don't need to be walking them through the details. Ever since our Aadhaar system, ever since our KYC system has become such robust, right? It has become, this factoring, fractional style of investing has gotten a lot of interest. Unfortunately, all the product manufacturers, whoever it is, whether it's a Giraffe, Liquid Loans, Asti, all of them going about saying, invest in such a small amount. Nobody talks about the pros and cons like the way we are trying to decipher. I'm doing this from a startup because the chances of you losing your very first, second, third, fourth investment also is very high. Okay, I'm dealing with another group of families who have gone about investing in another platform. And because of me trying to be too accommodating, it is like, what is happening with this money because of ignorance. And quite frankly, that frustration is what I'm making sure I don't have to deal with again. Because the easiest thing is I can come to you and tell, take mutual funds, forget about it. Because the world is also playing the same tune. The only reason for me to offer these alternate instruments is so that y'all, can I request everybody to please put your lines on mute? Thank you very much. So the reason for having you, for sharing these opportunities is for you all to diversify. It doesn't by any means refer to that you have to. Can anybody tell me on this call, have I forced you all to get any financial instrument so far? Right? So if that is this will continue to happen. Please understand, ladies and gentlemen, when I'm coming to present products to you all, it is not of the interest to just go about making a quick money. Some of you have been with me for 12 years and some will continue to, and I'm dealing with some second generation and the previous generation's money as well. So for me, losing out on a family's trust is more important than having to make a quick 1 or 2% commissions. Okay. So with that said, Nagbhushan, thank you for bringing that up, but we will address that towards the, towards the course of our webinar today. These are all the challenges. Now let's talk about why IPV.
Sorry, I guess there's a point which is another challenge which you want to highlight, and I hope IPV is taking care. Since basically, I mean, we have it other investments in QDS and all, right? So it's basically when they are not when going on with the terms that they have put through or they've agreed upon at the time of investment, there should be someone. I mean, like we are trying to figure it out. How do we legally go? How do we go with the standard, right? So that's one more challenge which would be there. Like at an individual level, even if you find some companies very good, like the way we did in QDS, it's very difficult for us to get the money out, or you just listen to what they say, right? You absolutely have no control.
There are two things. And that is the reason why I started this call is that you will lose your money. Very clear? I am emphasizing the fact that irrespective of the fact that Sharath is bringing this, you will have to evaluate. So we enter this keeping in mind, either I will go piggyback with Sharath, or I will do my own research, or I'll stay out. These are three options. Now, to address your question, what you were bringing in terms of QDS, the point with QDS is we were very clear about the fact that how they see a pivot is very different from what they're choosing not to do. Business situations get a lot of families. In fact, out of IPV's 8 deals that didn't go through, 4 of them happened because of COVID. Now, some businesses thrived because of COVID. Some businesses just couldn't recover from the shock of COVID. And that was for no fault of the business. Right? Now, as far as IPV is concerned, in terms of all the advantages, I'm going to begin sharing. And please let me know when you're able to see my screen. Is that okay? Can I see a show of hands? Okay, thank you very much.
Yeah, seeing the screen. Yeah.
So this is what I'm talking about in terms of what sets IPV apart. First of all, they're a company that has 180 people working for them. It's not a random startup platform that has just decided, let's do a little bit of coding, raise some money. As a company, they've been in the business for the last 5 years. Okay. They have structured 195 deals and only 600 crores. So I need you to know, on an average, they're doing no more than 2 crores per deal, out of which 8 deals have failed, and they've given exits of 10 full exits, 21 partial exits. This was at the time of me writing my email. And if you saw today's message in the group, we saw another complete exit that was happening. What does this mean? Out of the 200 deals, only 20 or 40 deals have gone. What happened to the others? They are taking time. It has not gone bust. But what has definitely gone bust, where your money will not come back, is this 8%. So in other words, what this number is saying, if I continued putting 1 lakh rupees in all of the companies that I did, I would be standing at an overall portfolio level of 44%. If I minus my charges and everything else put together, I will be probably another 3 or 4% down. 40% IRR over a 5-year period. Is that something that works with you? Great. If not, and you're going to be focusing on one deal that didn't go through, not a good idea. So funny to build on, and glad that you brought this question up, right? As a platform, what is it that they do? Do they only raise money? Absolutely not. You see, we got about 8,900 CXOs and HNIs. So forget this. Even if you have 20 CXOs on the platform, does it make a good community to be a part of? That's question number 1. Pointer number 2 is that the fact that they are doing a community-led approach. What does this mean? They're not just getting startups funded. They're looking at how they can go about exiting. Because what kind of deals they do? They do pre-series, angel, and possibly an A series, if it's extremely good. Then there is a B series, C series. So we are not going to be waiting till IPO or whatever it is. The minute an exit comes to the next level, like what happened with this company called Coors, right? You get a complete exit, you exit. The challenge happens when we get emotionally involved. Oh, we got 44%. Let's wait for a little more. I mean, we're 44% IRR basically. This one gave you a 2.1x in 22 months, which is significant, right? Because in the last 2 years, how much has Nifty given? 12% returns. So even if you're investing in the best mutual fund, your returns is no more than 15% CAGR as compared to a 44% IRR. Now, this is a good deal to speak about this investment. What about the ones that have not matured? So the challenge here is, it is not about just entering. The important point that we have to consider is the fact that your waiting period could be anywhere between 3 months to as high as 4 years as well. The easiest example, sorry, Ram, 1 second, let me complete. Sorry. The easiest example I can give you, since most of you all manage a team, tomorrow you hire a person who's from your industry, has come with your background, you will at least give 3 to 6 months time, irrespective of the salaries you are paying for that person to perform. Why should a company get any further? Now, let's say this employee doesn't perform over the next 1 year. Are you going to fire? So the reason I'm giving this very, how do I put it, relevant or irrelevant example in a manner of job employment, that's exactly what you're doing with a startup. You're putting your money employed in a company to see whether they can deliver or not. And instead of putting all our eggs in one company, we're going to be spraying and painting. That's the word spraying and praying. Here you will not pray, obviously, but you are spreading a risk. How we'll spread our risk is what I'm going to be talking in a little while. But here's the advantages of IPV, right? It's a collaborative support. It's a community-based driven support. The company has got 180 employees spread across 4 offices. Why am I saying all of this? Because a good majority of you all were talking about charges, that there is an entry load, then there is a platform fee, then there is another 12% on exit, right? So we'll address that a little later, but these are reasons why I consider IPV as a platform where I'm deploying, and you will see me deploy. I've already deployed money in 6 companies so far in a short span of 6 months, 3 months. Okay, that means nothing. I have invested because I know my risk appetite. That doesn't mean you should go about doing the same. I'm just being very transparent in terms of how I'm dealing with this asset class. I'm very clear in my head. If I do my SIPs of 2 lakhs, which I'm currently doing per month, if I do it for the next 10 years, all my financial goals will be accomplished. Means no sense for me to go about putting all my additional money in the same asset class to get 12%. If all my financial goals are going to be accomplished, I do not mind this money not returning back to me. But if it's giving me that extra kick of almost 2 times or 3 times the money that I can make, then why not? Heck, tomorrow there might be an SIP coming up only in startups. I don't know, but I'd like to be prepared. I don't want to be ignorant about it. This is me. This is my risk appetite. Are we okay with this? Is this fair? All right. So now with that said, let me see what are the pointers that I have to talk about. So we've spoken about the numbers. What I have not told you all, or if you don't recollect, all of IPV's deals are led by the co-founders. One of the co-founder will have the investment at bare minimum at the same valuation with no extra benefits. So there is no kickback or pass-through that is happening.
So co-founder of the startup or co-founder of IPV?
Co-founders of IPV, Kavita. There are 3 main guys, followed by 4 senior folks. So one of the 7 members will always be investing in the round that is led. Okay, so that again shows transparency. That doesn't mean that the money will not go down. That just simply means they are backing up, they're putting their money where their mouth is. Okay, I'm saying all of these factors, and you might still say, Sharath, after all of this, there are people with an evil intent will go about making a fraud. So go as skeptic as you can, and if you see that level of skepticism is high, do not look at investing in this instrument.
Sharath,
okay. Sorry, Kavita, 1 second. Kavita, 1 second. Ram, you had something to mention. I cut you off.
Yeah, I just a follow-up question, I'm sure. So we were talking about around 31 exits, including full and partial exits.
42, 43 now.
Okay. So there is a significantly higher percentage which is still in progress, which could be anywhere between as early as 1 day or
good question.
5 years, because they are just 5 years company. So do you know
Ram, what is important to know? Sorry, I'll cut you out, Ram. I know where this is getting at. The number of deals that happened initially were very small. The frequency were very long. Today, every Saturday, there's an investors call, which means they're presenting 4 startups at bare minimum every month. In 1 year's time, there will be at least 50 startups being presented. So while money is lent, even if you take at an average of 2 years to mature, 2 startups, money that was raised in the last 2 years, those guys have not got the enough time for gestation. That's why you're seeing a much smaller number of exits when compared to how many have been funded.
Yeah, so that's all. My question was, do we know the do we have the how do I put it, profile of these remaining companies on how long they are basically invested so far?
I can possibly generate that, but I do not know what purpose will it solve, Ram. Because see, just like
we mentioned that there are 3 months, anywhere it could be 3 months to 4 years for us to get a potential exit. The potential exit could be just from 10% of the companies that we invest maximum. Right? I mean, best case, if we can expect 10%, we can still take it. I understand that part. But
no, Ram, that is incorrect. That is incorrect. And I'll tell you why. Which part of now, since Ram, you bought this, and I think it's a good point, good time to introduce this point, because I was planning to consider this last. Now, we all know the different charges that are there. There is a subscription fee, platform subscription fee, which on October onwards will go up to 24,000 rupees plus GST, which is a recurring fee every year. Okay. Recurring fee every year. This is a platform fee, whether you invest or not. This is just to be a part of the platform. Like Mansa was saying, she would like to learn. Because there is, believe me, when you listen to one founder's call, you will be surprised with the amount of data and the background work that happens. It's just out of the world. Right? So it definitely looks like a company that is seriously only looking at building money. By the way, IPV has not raised any money. All of the profits, all of the salaries are being paid from the operational profits that is happening. This is very important to note. So Ram, second charge is what? My entry. So on every money that I collect, if I raise 1 crore, I make 2 lakh rupees because of 2%. I'm talking in terms of IPV. If I raise 2 crores, then I make 4 lakh rupees. In the grand scheme of things, how much is 4 lakh rupees going to come per startup? 50 startups, 4 lakhs. We're talking about 20 crores earning. 20 lakhs, sorry. Okay. Bulk of IPV's money comes from the exits because it's at a 12% exit. So even these all small charges that they charge, for them, this is just to make sure that the platform, the big icing on the cake comes because of the exit at 12%. We clear, Ram? So whether you like it or not, the platform's operation process is designed such that they make the killer money when the companies exit. So for them, it is more important that the companies do exit, but not exit at a cheaper valuation just because you want to make an exit. Exit at a fair valuation. Like on the main call, on the introduction call, they got an 80x return with Bharat Pay. They got a 4x return in a short 3-month time with another company. I'm not talking about returns here because quite frankly, while returns is a good earning, for me, it is a matter of diversification from where I can make money and returns that is not related to the stock market. It is not correlated. Okay. So to answer your question, Ram, they will be more keen on getting exits. So right from the filtration criteria, right from the deals that they strike, right from the partnerships that they strike with fellow startup companies, all of it is designed from an exit standpoint so that at least Series A, Series B companies go about buying them out. Did that add clarity? How many of you found Ram's question to be helpful right now? Show of hands, please.
Yeah, I have further question. So yeah, maybe I'll ask.
Yes, I will. Is it pertinent to the charges? Is it pertinent to the exit?
The same charges part, right? So I was saying like let's say today they're saying 12%, right? So 12% is like at the time of you investing, it's saying that okay, we would be taking 12%, right?
No. When I invest, if I'm funding 1 lakh rupees, I pay 2% investment fees.
Just to, I understand that part. I'm not asking about that. My question is, let's say I'm investing in XYZ company, right? They say whenever there's an exit happen on this XYZ company, we are going to take 12% out of whatever the return that comes above 10% XIR. Right. So that claim they are going to make today, because that 12%, if it is not, I mean, it's like tomorrow it can be 20%. Maybe let's say once they're doing well, they may say that, okay, whatever the effort that is going from their side on the startups is, or their platform has become big, they may say, hey, I'm 1 year down the line, any company that you invest on return, they'll charge 20%. Correct? You what I'm saying?
There are 3 ways I will answer that question. One, from being a crude investor as an entrepreneur myself. I will not want to do that. I would not kill the golden goose as a business owner. Second, if that happens, and let's say they are going to become as greedy as they can, as an investor, you choose to exit. But what you've signed on for is what will continue because it's SEBI regulated.
Yeah, actually, this is where I have confusion, Sharath. Maybe clarify. See, SEBI regulated in what sense? Is it they're saying that, hey, you can collect only 12% on the return? Is it what SEBI regulated?
No. There is a complete regulations around what a Cat 1 AIF can do and cannot do. They can charge what charges they want, but whatever you do when you sign, that is final.
Okay.
It cannot change. You can start another 100 crore fund with another series having different terms and conditions. But whoever signs on a particular agreement, that will continue till the end of the tenure.
Okay, so this end of tenure means end of 25 lakh investment. Is that the tenure of this fund?
No, funny. Please understand, I am telling all my investors not to put beyond 25 lakhs because I know all of your risk appetites. I am putting 25 lakhs not for, will I only stop at 25 lakhs? No. Me personally, I'm looking at building this portfolio over a long period of time. Okay. For my investors, till you all get the risk appetite, till you all understand how much of time and effort goes into this, you will not put beyond 25 lakhs for now. But given the success stories I'm seeing, most of you will come back and say, Sharad, can we build up on our allocation? So 25 lakhs is not a limitation for you on this fund. You can choose to invest how much you want, but minimum as per regulation, you have to put 25 lakhs over a span of 5 years.
I'm sorry, sir. I guess I'm not putting my question right. What I'm saying is today, whatever, let them charge 12%. They're saying that they would be taking 12% on at the time of exit. What I'm saying is like during the course, because the exit won't happen now, right? Maybe they'll happen whenever it's a right time to happen, right? Is that 12% is going to remain same? I mean, if they say that tomorrow 20% or 30%, that's what I'm saying.
1 second, Fanny. So let me put this way. You have not looked at a SHA agreement. You've not looked at the onboarding agreement, right? So that is okay because you've not done an investment just as yet. In the agreement, it very clearly says for all of your money that you're signing up, you will be paying this fees. It will not change unless they give you it will not change for all the investments that you've done ever. For all the fresh investments that you're going to be doing in the future, it could change. And quite frankly, Fanny, I don't see that happening because of how IPV is doing. Because what I've not told you all is about the other side, where they make money for the amount of money that is raised from the startups. And this is not what they are doing very unique. Everybody is doing this on the platform. Sorry, everybody is doing who is involved in this line of work. They charge the startups. Why IPV?
I'm sorry. Just that I got my answer, Sharad. Just why I'm saying it, like, and see, when I have to calculate how much that you're going to do, if they're going to fix to 12%, okay. I mean, I can do a mental math of whatever is the written that would do, right?
By the way, again, Funny, I think you didn't. I'm not sure if you mentioned this, but for everybody on this call, the 12% exit is only if there is a 10% growth that has happened IRR basis.
Yeah.
So if there is no growth of 10%, then there is no exit load. But if they made 11%, you will be paying 12% exit on the entire profit that is generated. So please understand it's
not about 10%, is it?
No. It's a catch-up clause.
No, but that's so that's where there's a star. So that's what I didn't understand. If they say 11%, then effectively means on the entire because then you would end up getting less than 10%, right?
Think about them as a platform, no? Do they want to exit at 10% or would they want to exit at 100%?
I mean, again, that's not what their preference, right? It's basically based on how the company is doing. That's a different story. No, but I'm just looking at me as an investor. If I have to say that, I thought it's like an above 10% return, whatever is the remaining money, they would be charging 12%.
All your PMSs, all your AFS starts with a catch-up for whatever margins they missed out. So here's the thing, Funny, and for everybody on this call, it's 12% on the returns that is being earned. So let's say if you paid that extra 1%, out of 10%, you got 11. You're paying 12% on the 11% that is earned. So good news is here you are at least getting an exit and you've not lost your money. But for this particular deal, you have got, but look at it, if for IPV, bulk of the money is going to be coming from exits. Why will they exit at a 10%? I understand for us as an investor, but if you're partnering and structuring deals with a platform, you need to see where they are making the money from and what is their interest. They're not some newbies that have just come over the last 1 year, 2 years time. These guys have been in the market for the last now 6 years and counting. They have not raised money from the market. All the other platforms that I know of have directly, indirectly raised money from the markets. So this is, see, again, Funny, with our past experiences, it can be like, Sharad, it's too good to be true and it can go down. Yes, it can. So evaluate if this is something that's okay. If it's not, like I said, please give it a pass. And I'm not talking from an arrogance or cocky manner. I'm just talking from a risk behavior, from a behavioral risk. I'm missing out on words. You get the drift, right? And what I'm saying is, if it doesn't show the risk appetite,
I mean, these details are required for you to understand, I mean, how the returns are going to be. Because, see, again, we have to do on startup, we know there is a principal loss that's given, right? Now, question of whatever 10%, I mean, that's a good case, 10%, 15% that would, where you can expect returns. So you can just think of, I mean, how much it's going to give a return, right? For that,
Fair
you need
enough.
to know all this. That's
Fair
I mean,
enough.
this is more of like you need to know, I mean, where you are putting
Thank
money
you
and
for
then
asking,
how much
Funny.
is
I
good
think
with charges. Yeah.
Sorry, I think I was having a lag, but Funny, and I think who was the Ram? Thank you for bringing this because I think it helped a lot of the audience, right? So let me see what are the other pointers that I need to cover as far as this process is concerned, right? So we spoke about charges, platform fee. Right now it's 21,000. After October, this is not me trying to do a quick sale or something of that sort. It's on their platform. You will end up paying 25%, sorry, 25K plus GST for 1 year. All of you have a free trial period. Even if it's not showing up on your app, I will get it done at the back end by talking to the IPV team. Okay. But no point looking at, see, please understand, they are looking at how well they can go about having this platform. They have chosen to have a charge from the platform. You can choose whether you want to listen to call recordings or not. It is not a must. I chose to do it for 1 year. In fact, for 2 years, I paid the fees without doing one investment because I didn't have the time. But once I got hooked onto it for more reasons than one, which we will talk on our personal calls. Second, entry fee, which means you'll collect 2 separate checks, one for the investment and one for the fees. And 3 will be your exit, which will happen on profits. So these are charges, long and short of it, right? Last 2 parts that I'd like to know from all of you here, there are 2 ways that we can participate. Either you come and say, Sharath, you know what? I like this idea. I'm okay to risk 25 lakhs over a span of 5 years, 2 years, whatever that story is. So you tell me which companies I'm going to be investing. I'm okay. I will not come and complain. I will not come and hold you responsible. That is one category of investor. Second category of investor, you will say, Sharath, thank you for introducing me to this platform, but I do not need your help. I'd like to do this research by myself, and I would like to invest in the amounts that I'm comfortable with. Let me know upfront during our individual calls. If that's the case, I will introduce you to an investment to an advisor on the IPV platform who is also taking care of my relationship. So you will be introduced and you will have your conversations with that gentleman. I will not be involved in this because I will not have the time and bandwidth to see what caught your interest in a particular startup and why you're putting so much money. I'm not going to be involved. Okay. So if you're going to be using my approach, which is the piggyback approach, and my approach for all of you is going to be threefold. I am going to be investing every startup that I feel is got a unique proposition, is not got competition. Second category I will use is that IPV gives a scorecard for each of these startups. If their scorecard is above 75, I will put my money in. Okay, how they rate the score, how they rate each startup is on those various parameters that we look at the scorecard. But for simplicity's sake, anything above 75, I will be putting my money in as long as it is diversified line of business. I'm not going to keep any restrictions on religion, faith, or whatever it is. If there's a drone startup, I'll put. If it's a liquor startup, I'll put. If it's got to go about doing e-commerce, I'll put. If it's a healthcare startup, I'll put my money. As long as it has got something very unique from what is not there in all the existing, or there is no competition. This is my approach. It may work, it may not work, but from a diversification standpoint, like for everybody else, I'm not looking at swinging for the fences. If what IPV said they've made a return of almost 144% or whatever that is IRR, I'm not looking at that. Let me rephrase what I just said. Irrespective of whatever the marketing brochure of IPV says, in my frame of mind, I'm looking at a 20 to a 30% IRR on my overall portfolio. That doesn't mean if I put 25 lakhs over a span of 5 years, I'm expecting 30% on 25 lakhs. For every money that gets deployed, individually, I'm looking at a 20 to 30%. Why am I happy with 20 to 30%? Because I will not get that returns from my mutual fund investments. So I'm only putting the money that is a surplus over and above all my, over and above the money that is required for me to accomplish my goals. So let me rephrase. I have certain goals that have been documented till the time of my survival on this planet, right? Retirement, my daughter's education, car, whatever, right? I am doing an SIP for that. I know if I do this amount and I continue to make 12% CAGR, if I continue to do 12% CAGR, I will go about accomplishing these goals. I am only putting in the money over and above those contributions. I'm not replacing my mutual fund portfolio. And for all of you, when we're going to get on a personal call, you will see my SIP book at 2 lakhs itself. Why am I doing the SIP route, even though it is, going to be tomorrow's FD? Because that is certain. that is more approved. There are more herd. There is a herd mentality going. I'm benefiting from the herd mentality. Today we are, I think, at a 15 lakh crore SIP book of general investors. And they are still only 10% penetrated with Indian markets. If 50% of the investors come on board, you can just imagine how much is going to be the contribution. Because in the US, we have a 60% penetration of retail investors. India is going to get to that stage. So whether I like it or not, I know for a fact my CAGR return of 12% will come. Now, for everything above that is what I'm looking at, these various instruments that you all have seen. There is not one instrument where I've not got my money in. Right? So my point is, this asset class has a very different underlying risk and a maturity level. You need to give it 5 years. Can you get exits before that? Absolutely, yes. But if you're looking at wanting to track it on a daily basis, see what happened, how much has it grown, do not look at this asset class because you will not get this information. Okay, I see there are some questions coming on the piggyback approach. By the way, this is going to be for however long this is going to continue. You want to deploy more than 25 lakhs? I will not appreciate it if you want to directly go put. We will discuss this and we will see whether your risk appetite, future incomes, change of lifestyles. For some of you all, unfortunately, you all have lost your jobs, right? It didn't hurt you all as much because we had got very good clarity about how much money is got to be kept separately allocated for this. Therefore, with this additional amount of returns, there will be additional amount of risk that we're going to be taking. So are we prepared for that? And then means if I see that this is a good fit, then we can go about bumping it up. There's nothing stopping us from taking it to 25 to a crore. Good. Let's slowly and steadily do it, just like how we built our SIPs. Well, we're coming to me with a 5,000, 10,000 rupees starting. And then when we showed you the financial plan, you went from a 25 to 50. And some of you are doing a 4 lakh, 5 lakh, 6 lakh SIPs book. Right? So once you get comfortable, then let's go all guns blazing. But we start with one company per month. So here's my approach. I have 25 lakhs to deploy. Other than putting it over 5 years, I prefer that I do it over the next 18 months because right now, there is this funding winter, which all of you are already aware of. Funding is not coming very easy to most startups because the money is dry. And during these kind of calamities is when you get some very good deals. So instead of waiting towards the entire cycle, just like how everything else has a cycle, we have the startup market also has a cycle. Currently, we are at downtrend where it is not very encouraging for most businesses and most of them are failing for need of cash. So founders are looking at any place where they can get this money, oxygen, for a little longer time till things get better. All right. That is my approach. Any questions so far before I go into the investment process?
Sharad, I have a couple of questions.
Please.
You talked about a fact that all the co-founders are going to invest part of
Any one co-founder will be investing per deal. Any one.
Yeah, one or more, right? Maybe investing. And I want to look at it from a very paranoid investor lens.
Yes.
What if these guys are investing the same amount that they are taking from us as 2% just to show it as a traction for the use of platform? Is that possible?
I don't.
Because then they are more mainly focused on as the platform provider rather than as someone who is more interested in the startups or something. Because they want to show that there are more platform users, and for them this user acquisition is more important, and to get their own funding that they may need in future. Actually,
you are spot on, Kavita, and my very crude answer to it, it could be the case. However, why I'm a little gung-ho, I'm giving them so much of preference is you've not listened to a startup call of theirs. Listen to one of the recordings, see the amount of time, effort that goes in. Right? And see if your perception about them change. See, I'm using the word perception because I can't give you I have not sat on their verification process. I'm giving you data points that has been shared with me. And then I went about checking. For 2 years, I didn't put one amount. I didn't cut a single check. But in the last 3 months, I've invested in 6 startups. Right? What are the things I can do? Do this company exist? Are the founders actually there? I can do all of this. Every data point that is shared on a call is showing up on their, you can verify this data. Go online, check if the company's registration details are there. On the what is this thing called? On the Register of Companies website. See if
Okay.
they actually have a GST. All of these things we can do a cross check. But again, after all of this, can the company still go bust? Absolutely yes.
Okay. So when you say that you're going to invest in the startups if the rating is 75% or above, based on their
Scorecard, yes.
due diligence,
Yes. Yes.
are we going to first listen to their investor call and then make a decision, or are we just seeing the score and they will say we'll just go ahead and
If you're
invest?
saying we, as in you as an investor, it is completely your choice. For all the deals that I'm going to be recommending that, hey, you know what, folks, I'm putting my money in, you can choose. I would have listened not just to the investor call, but to the founder's call as well.
Okay.
I'm telling upfront, I will not give you an explanation as to why I'm doing this because it can go into pages. But if I see the need, if I can figure out how to make all of these pointers in, let's say, a quick para or two, then I will put in that, I will tell you all why I'm doing this.
Got it. And you said also that you are putting your money, considering that you are expecting about 20 to 30% IRR, right? And this is
That is my expectation, yes.
For investment, right?
Yes.
And this is not like the so when you say at a consolidated level, where you will say out of, let's say, per investment is 1 lakh, right? And we say we are investing in 25 startups, right?
Correct.
3 of them will give us, let's say, 40x, 50x.
That's right. That's
rest
right.
all will be doomed. Are we going with this approach, or you're saying
that is my approach?
Startup has 20 to 30% IRR.
No, so my expectation. So let me rephrase that, and good that you're bringing this up. Just like Giraffe, right? Giraffe as a platform on bill discounting is giving returns of anywhere between 11% to 13%, depending on the invoices that they are discounting. Now, overall, because this is fixed, it cannot go more than 12% or 13%. Therefore, I know overall how much ever money I put, I will be in the neighborhood of 12%. However, here, because there could be some companies where I lose my money, which is complete zero, or I could make a 10x as well. That is 1,000% return, right? I cannot decide when this average will happen because the unknown factor is when am I going to get my exit.
Exactly. Yeah.
That's why the return formula that I'm going to be the return metrics that I'm going to be looking at is IRR, which means for how many ever months a particular investment has been deployed, how much have I managed to get? So when I look at my portfolio after 5 years, if I've deployed 25 lakhs, this 25 lakhs at an average should have earned me 20% IRR.
Okay.
That doesn't mean that after 2 years, there could be a company that is giving me 0%. Am I going to be upset about it? No, I know for a fact, rest of the deals will make good for this one loss.
Got it. Okay.
So easiest and a very, very lame way of, giving you a comparison is, let's say if you're a project manager, you've hired 20 people. Out of 20 people, not all of them will be superstars. 2 of them you will end up firing after some time.
Yeah.
That's the piece. Did I answer the question for you, Kavita?
Yes, sure. And that brings me to my next question. So we know that there is also a lingering threat of economic crisis going to hit us soon, etc.
Yes.
During this time, there could be a good chance that most of these startups may not survive, or for most of the startup, it could be an opportunity, like during COVID, right? We don't know which way it may go, right? So this is a big risk. And do you think this is still the right time to invest in such a platform?
Kavita, you've been investing with me in mutual funds for how long now?
I mean, it's ages ago, right?
I know the number, right? Let's say 2009, you came for my workshop, 2010, 11, right? It's about 13 years now. How many cycles have you seen where there has been so many things of saying markets are going to, collapse multiple times? Why am I asking this question? Because sometimes the best answer to a question is asking a better question. Now, to answer this, how does a startup end up losing? Either they developed a product that's not a need, either they've just gone too fancy, or they just didn't listen to the market. And last, cash flow crunch. So when IPV is investing, you will listen in the call recording, they're investing for a particular reason to give them a runway of certain amount of time with a potential exit in terms of how they can work that out. Okay, so we are not investing today and then the startup is going to collapse tomorrow. In other words, if I'm losing my job today and I don't have money in the bank to survive for 3 months, I will fail. But if some financial advisor told me, hey, you know what, Sharad, it's critical times now. Don't just be with 3 months of runway. Keep at least an 18 month. Then if I didn't get a job over the next 6 months, doesn't make a difference because at least my day-to-day expenses are going for the next 18 months. So with every economic collapse, there is going to be a good opportunity available for us. And if businesses are smart, that will be the pivotal point. Just like what happened to TCS, just like what happened to Enron, Shell, Standard Oil, and so many other companies that have happened during recessions and economic crisis. So the answer, is this a good time? I generally like to look at it, yes, but it depends on how things are going to play out. We don't know whether the China-Taiwan piece is going to, affect us. When is it going to happen? It's Ukraine and Russia. Can you imagine a year is gone by and they're still fighting, right? We're looking at dollar being dollar. I mean, now there is a separate currency that's going between the BRIC nations. So we don't know how things are going to be planned. But one thing I know, smart entrepreneurs, smart businesses will always find a way to pivot and turn around with things. So unfortunately, I don't have a straight answer, but this is an explanation to a very short question that you asked.
Got it. And maybe one last question, right? How will we get the exit if it is not via IPO? Is it going to be via Series A, Series B kind of funding?
It is only going to be through a next round. There is IPO is too far a question. Don't even get there.
And the next round is enabled by the same platform, or is it going to come from anywhere?
Okay, let me answer this question in another way. How many of you watch Shark Tank? Not India. This is the India's Shark Tank is a drama, basically. I'm talking Shark Tank US, Shark Tank Australia, or any Canada, whatever. How many of you have seen? Okay. How many of you have seen the judges saying that right now you're not a good fit for me, even though they're in a good business? Right? In the startup world, Kavita, there are people who like to invest at different stages. Some of them like to see a proof of concept. Some of them like to get at a friends and family round. Some of them have expertise only when you come to a big size. Right? IPV gets to the stage where we are talking about where? Angel round. Please understand, you are not investing only in a company where IPV is leading the round. IPV is doing one portion of the investment along with other angel investors. Right? So out of every deal, let's say a 7 crore deal, I mean, if you're talking about 2 crores, how much? It's not even $1 million, it's not even $250,000 here. Right? So when they're raising a fund of, let's say, 2 million, 3 million USD, you're talking about 7 to 8 crores per million. Out of which IPV is doing one small portion along with other platforms. If there is an option.
Got it. So you raised a very interesting point then. Will we also get exposed to the information on who are the other investors? Because, I was listening to this WTF podcast by Nitin Kamath, right? And there was a recent one which was very good on VCs. So there are these kind of guys who are reputed guys, reputed angel investors who invest in these kind of startups. Will we get to know whether there are, because they may not be investing via IPP, they will be investing via their own platform or their own network. Will we get exposed to such information on who are the other angel investors who are investing?
I'll answer that in a very crude manner, Kavita. There is this guy called Kunal Shah from Cred.
Yeah.
Most of the people flaunt his name on their pitch deck. Means nothing. Please understand, he's gone about putting his money, which is one portion of it, which he's raised from raising money for his startup.
Yeah.
Okay. As far as getting to know who are the other people, on your investors call, you will get to see who are the people who are leading the round, who are investing from the platform, which is IPV, not external investors. At least that is what I've not seen. However, that should not be the reason for you to go about investing. Because whoever, like someone like a Nitin Kamath, who's got multiple zeros after crores as his net worth, it would mean nothing for him to go about putting 5 crores in one company. Right? So I'm playing devil's advocate. I'm not giving a straight answer because there is no straight answer for this. Knowing other people just gives you that conviction that, hey, but look at Nitin Kamath, and I think his brother went about investing in another sustainable energy company. They are the only people who have invested, nobody else. They cut a large check. Now, if it goes bust for them, it is just like, one vacation when bad times. But for you and for me, it is very different. And that's why we're going through the diversified and a fractional type of investing. And that's why I'm saying no swinging for the fences.
Yeah, I mean, just one thought, like this could have, this kind of information will come in founder's call anyway, right? It may not be there in the
not in founder's call, it will come in the investor's call. So I'll get to the process very clearly, very quickly, so that we can wrap it up with the Q&A. Ladies and gentlemen, here's the entire process. When a startup comes and approaches IPV, there is an evaluation that IPV does. Okay. How does this happen? They have to fill up a form. And if that form, it's like a interview. If IPV likes all the parameters, then they call them for a founders call. Every Saturday, there are 2 founders calls that happen alongside with one Wednesday. Okay. So there are 2 founders calls. Each call goes for 1 hour. It has been happening since the time that they've been doing this. Every Saturday, there are 2 founders calls. Now, depending on the interest level of the participants and sometimes on the conviction of the founders, they will then go about doing their due diligence. Due diligence is going to be everything from financial, competition, operational, founders, and every other parameter that you have to check, which takes anywhere between 2 to 3 weeks. Okay. So every Saturday, there will be one investors call. In the founders call, the founders will be pitching what their business is and so on and so forth, alongside with the founders at IPV. But in the investors call, there will be no co-founders. There will be no founders of the company. There will only be founders of IPV, the lead investors, the analyst of that particular company. This way, you will get a absolute no sugar-coated or no, round the table kind of conference. It's round the table kind of discussion. It's straight to the point. This is what it is. This is what all investors who are keen on investing will go about asking questions. And towards the end of the day, you will go about saying whether you're interested or not to invest in this. Now, let's say you are interested. After attending the investors call, you are interested. It will take anywhere between 2 to 3 weeks time to ensure that they call for money. Why is this such a long process? Because when you give your interest, they will need to see how many such people can be fitted in the cap table. Okay, are there that many availabilities? Because they have preferences on who will get to invest. Right? So once that happens, in 2 to 3 weeks, then they will have an email coming to you, which is a call for money. And for ease of understanding, I will show you all how that looks like. Do you see this? This is a drawdown notice. They said, we are pleased to find out, This simply means transfer the money. I have 7 business days to transfer the money. After that, we cannot expect any money. So here is your term sheets, AIA term sheet, SSSHA, SSSHA. What are all these? Because I have invested my money, I have been able to download these these paperwork, and I'll very quickly share them with you. So this is how a SSHA agreement looks like, and this is how the term sheet looks like. These are all the other companies, so I'm not even going to walk you through that, because I think what we're looking at is just getting through one company first. So we're looking at the term sheet here. All of these details. It's like your application form for mutual funds. Who are the founders? Who are the investors? Who are the other people that have come on board, etc., etc. All the details pertaining to your investment is right over here. For those of you who don't like technical thing, skim through the page. For those of you who'd like to learn how an agreement is created, go through the entire thing. Read through them. By reading and understanding, there's lots of other things that are already there. The exit clause, board meeting, all of these things are already showing up. Right? And on the same basis, this is how your shareholders agreement will look like. There you are. As you can see, it's a 98-page document. The reason why it's a 98-page document, because after a few sheets, it's going to be everyone's name and signature to be captured. But bulk of the details are already there within the first 20 sheets. So for those of you who think that, the platform fees is expensive, look at how well the legal agreement is drafted. What are the clauses that are put in? Right? So that is that. Now, when you get this call for money, if you don't transfer your money within them, your opportunity is gone. If you transfer and the money is accepted, then you will get your shares showing up in your DMAT account. Important to say that it is going to be your DMAT account within 2 to 3 weeks' time. After that, if you have the time and bandwidth, you can get onto quarterly calls to evaluate how the startup is doing. I am telling you on this recorded line, I am not going to be attending to the quarterly calls. Not worth my time, right? That is going to be something that IPV's team is going to evaluate, follow up, and see how they are doing. I don't want to have extra knowledge. All the knowledge what I needed was whether to invest in the startup or not. I will take a bullet point download from my advisor or from the representative that I have at IPV. But I will not be sitting for this board meeting call or anything else on a quarterly basis. See, I'm being transparent with you all, not from a approach of being cocky or arrogant. It's just being very transparent in terms of where I'll put my time and where I'll not put my time. By being a part of that call, what will I garner? I can't exit. So what is the point knowing and gathering 40 companies board meeting calls on a quarterly basis? Not worth. I mean, I can't, if I can't action on something, there is no point of me putting my time. This is how I'm valuing my time. It could be very different for you all. You all want to be a part of the call? There will be a WhatsApp group. Like, for example, if you'll see here, for every company that I have invested in, there is a WhatsApp group that gets done. You get added so that you get added from the IPV team itself. So there is 1, 2, then there is a couple of more. These are all the groups that have been added because my money has been accepted. All right. And you all will also be a part of these groups. I've got a separate notification for each of these. Anytime this thing goes ding, and I know, okay, I'll give a quick read and I'm done with that. So with that said, ladies and gentlemen, I'm bringing this to a wrap right now in terms of one sec. I will answer questions, but I'm putting a wrap for everything that I have to discuss with you all on the pointers. Now let's go all on for question and answers.
Sharath, quick question with respect to the shareholders agreement that you showed, right? Now they are an AIF, and I understand from the last call that generally AIF is a concept where, they do not want so many entries onto the cap table, right? So many individual names onto the cap table. So now when we enter into the shareholders agreement, will we be the shareholders of the end startup or will we be the shareholders of that company?
Question. Very good question and observation, Urvil. You're right. But that is where IPV as a platform is trying to democratize this. Please understand, we are investing through the AIF. But this is not the only approach where people are coming on board. For regular investors, you can get into each company by paying a minimum of 2.5 lakhs. You don't need to be necessarily part of the AIF. Okay. Then there is a separate strategy that they've run, which is called Maybe Angels, which means for every company that they're coming, first 5 companies, every new investor coming on board, first 5 companies, you can put 1 lakh so that you get a taste of investing in startups. I have chosen to take the AIF deal because it's that way more efficient in every bank, and more importantly, you and I as investors, we will get first preference of confirmation. You will notice, get on any of the live calls, they will open the link, and in 30 minutes time, the entire opportunity is going to be blocked. But they keep the opportunity open till Tuesday end of day to go about getting these details, whether there are more people. I have never attended any live calls because I cannot sit down to listen to 1x speed. I listen to all these calls on a recorded basis while I'm doing multitasking, and I'm pretty good at it, but I listen to it at 1.75x speed. So what is a 1 hour call gets done within 25 minutes. And by that time, I know whether this is a good fit or not. And then I go about deploying my money. This is me. So to answer your question, they have made this arrangement in such a manner where that AIF will go about giving you the opportunity to invest in 1 lakh, and you will not be investing in the fund. You will be investing in this startup. So your 1 lakh, you will get shares of, you will be on the cap table of the startup. Was I able to answer the question for you?
Yeah, Sharath. And the second question I had, mainly more so on the exit, right? You said. So I understand once you're a part of a startup, by making an investment into that startup, you are a part of that WhatsApp group as well, right? And that is where you come to know about all the updates and notifications, right? So if there are any exit signals that, they're planning to exit, etc., it's through that channel we will come to know, right? So as you said, we will, and your strategy is not to participate into the quarterly calls, etc. Then I'm just wondering, how is it that you sense the signals that, okay, there are signs of exit, there are signs of further round of funding, etc.
I don't need to know when is it going to be coming in, Urvil. See, my approach to this is, my approach to anything now that I'm doing, can I do can I take any meaningful action on the time that I'm investing? On the investor's call, on the founder's call, I know whether I will take that information and invest or not invest. But on sitting on quarterly calls, it means nothing. They will say they are on target, not on target. Okay, so what? That doesn't mean I can exit, right? However, to answer your question, how will I get to know? First of all, if I'm getting 50 people on the platform, IPV better know how to manage my relationship. That's point number one. Being very, being practical about it, I will be notified every time because that email comes, no, saying that okay, we are planning to exit, right? And then there is a universal, there is a regular chatbot that happens from IPV channel that notifies people. So to answer your question, you will first get to hear from me. If I am a little later than if you're not actively in line with IPV's communication, then I'll substantiate that with that, and the next steps will follow on basis what the email is coming through.
Gotcha.
Like my participation in the quarterly calls has no bearing on the exits, either for me, for you, or anybody else. Okay, Nirupama, I think you've raised your hand, so I'm not sure if this question.
Yeah, quick one, only with regards to the capital gains thing. If I'm an eternal optimist, so I just want to know where it will go. Is it long term, short term?
Long term is 20. Long term is 10%. Short term is 20%.
Right. Okay. Have you had an exit?
Has to make. I'm sorry.
Have you had an exit in the 6 deals that you've done?
I have done it in 3 months, madam. It will not.
You said start for anything between 3 months to 4 years. So I just took a chance. That's all.
I wish it would have, because I would be, bragging about it, but no, it's not happened. And quite frankly, I don't think it should happen, because otherwise, then my expectation is set. Now my money will. I don't want it to. In fact, at this time, if it stays put for a longer time, I'm sure the longer the maturity, the better is my outflow. But see, again, Nirupama, you would have probably noticed on multiple calls, I don't let the investment return decide my investment decision. I have already decided what kind of money can get in, and therefore, I'm not going to be non-stop looking at it. Because if I can do something, now we talked about the pharma fund, we talked about, timing the markets. Why did I give you all that information? Because I know we can take some meaningful action. For the people who did, we exited in 6 months' time with a 26% return. Then why do we need IPV? You will not get those opportunities every now and then. That's all. We are diversifying, right? So I like to put my time where I know I can take meaningful action around it. All right. So that is that. Go ahead, Sandeep.
Yeah, Sheth, my question is actually on the other way around. As you said, as per SEBI norms, the 25 lakhs in a span of 5 years is a mandate, right? So what if, let's say, in the last first 4.5 years, we haven't invested much, then are we forced to invest to reach that SEBI expectation?
Can I be very honest with you? For everybody, okay, there is no clear guidelines around this.
Okay.
So if you're asking what happens if you're not invested in 25 lakhs, I don't know.
Oh, okay.
There is no clarity just as yet as we speak.
Okay.
However, if you're coming with a mindset to invest only 5 lakhs, 6 lakhs, 10 lakhs, do not make your investment.
No, that's not the point. But
no, Sandeep, I'm not referring only to you. I'm referring to everybody.
Right.
See, do not come in saying that, okay, after 4 years, I will put all my rest of the 80% of my money. Don't do that. I mean, it's too far, because if the cycle is corrected, then it might make all the sense in the world. I'm looking at pacing it out simply from a time in terms of cash flow, in terms of making sure, for all you know, I might not have to put all of my 25 lakhs fresh. In 2 years' time, if I get a couple of exits, I will use that money to redeploy in this.
True. Yeah, that's right.
All right. So I hope I was able to answer the question.
Yes.
There's no clear answer. There is no clear. But tomorrow, if there's a rule that says that, if not, your money can get completely null and void, it could be the case.
Okay. And one more thing is, as we are talking about this as a SEBI norm, right? So
SEBI regulated product, yes.
Yeah. So is it through IPV? Is this commitment or any investment? Like, for example,
no. You are investing in IPV's fund. Okay. What you're doing elsewhere has no bearing on this, because that A1 SEBI regulated product has to be with that entire. It's like you investing in a PMS. It's not about you investing 10 lakhs in one PMS and another 10 lakhs in another PMS. All 50 lakhs has to be invested in one PMS.
Okay. Fine.
Right?
So
Go ahead, Funny. I think.
What happens?
One second. One second, Kavita. Funny, you've raised your hand. Is that for a question or is that for an acknowledgement?
There's a question. So
yeah, please go ahead.
Yeah, just want to understand, because obviously it might be different for each of the folks on the call. Is it like you want to strategize like, and you front load this whatever the total 25,000 something in the like 10 lakhs or something in the beginning, and then while we go we will increase?
So I'll tell you
you're going to do it in individual basis.
So I'll tell you how I have looked at what strategy I had for all of you all, which I have assumed. Okay, all of you all, if you all have at least 15 lakhs in cash and above, that's when I've considered to have you all on this call. Okay, that doesn't mean all 15 lakhs is getting deployed one shot. I'm looking at putting 1 lakh every once a month or once every 3 weeks in one decent startup. Okay, you want to do faster, do it elsewhere. Do it by yourself. I'm not going to get involved. Why? Because for me, from an operational basis, it's going to be tremendously challenging. Because most of you are going to say, Sharat, if you're investing, I'm investing, which means then I have to do a call for money. I will be telling them that I will be giving you 25 such accounts. And if I don't have 25 such accounts, then my relationship, I cut a sorry face in front of them, which I don't like to. And again, this doesn't mean you're obliged to do anything or you're forced to. If you choose to say, Sharat, I will handle my 25 lakh commitment the way I'd like to, by all means, go. I will get you introduced to a person who's going to be managing my relationship. But strategy and deployment is going to be completely on you. For the people who are going to be piggybacking on mine, the approach is 1 lakh every once a month. I'm hoping in 2 years' time, we deploy the entire 24 lakhs. How is this coming? You're coming in with 15 lakhs liquidity. You will be parking this money aside. Every once a month, money is going out. Next year, you get a bonus of 5 lakhs, 6 lakhs, or whatever it is. And we do some restructuring of your mutual fund portfolio, the ones that are not doing too well. We bring them some more liquidity. And then we go about deploying. Provided we understand the risk appetite and everything else.
Okay,
again,
got it.
Funny, just because I'm talking about all these pointers right now, that doesn't mean we have to make a decision. If you like this and you have certain all of us are going to get on one individual call. Make sure you've got all your questions and then only we will go deploying, because unlike all the other products, I'm not going to be saying, okay, let's go about this because you've made up your mind. Not going to happen.
Okay, thank you.
Awesome. Kavita, go ahead.
So what happens, let's say we invest around 20 to 25 lakhs and after 2-3 years, I think that this platform is not for me. And then in an event, right? I'm not saying that this is going to happen. In an event, this happens. Then how do I take my money back? So does that mean that if I'm going to get the exit for this startup for another 2-3 years, then will I have to keep paying the platform fees without which I will not be able to...
demanding that you look at everything on a doom side approach, because
I think the worst case has to be thought, right, in order to get it. Right?
I'm glad, Kavita. See, I'm not saying this from a condescending manner. I really mean when you're, this is really coming from as compliment, because these kind of questions help rest of the audience on the group, right? So to answer your question, Kavita, if you decide after 2-3 years, whenever that timeline is, you've decided that this platform is not for you, you stop paying a platform fee. But for whatever investments you've done through the platform, till the time you get an exit, you will be, IPV will be getting in touch with you.
And I don't have to pay the, platform fees or, yearly.
You don't have to pay the membership fee.
Yeah.
Entry you would have anyways paid. Exit, you're bound to pay paying as per the clause.
Correct. And that only means that I cannot enter into new startup, but I can exit from my...
You cannot have access to the plan. You will not be able to get into any other deals and things of that sort.
Okay. Thank you.
No, thank you for that question now, Kavita. So that is awesome. Any other questions, ladies and gentlemen? Any other questions at all? Okay, folks, one last time.
So,
can we have...
sorry,
go ahead.
I have a question. So I'm just saying, so now whatever that you invest right now, this would be, I understand it will be shown as in the demat form, in the demat account, right? So, I mean, where will you show this in the books? Like you will in the books, in the sense, do you have to show this in anywhere in your returns filing, saying that, because I don't know, are you getting a shares of that
so
company?
Here's the thing. I get where you're coming from, Funny. Let's understand all your financial transactions happening account to account. Okay. When you're filing your returns, your accountant will ask you, what did this money go for? You will say, I went about investing in a startup. Entry is documented. So whichever tool your chartered accountant using, it will show up in your idea. Okay. Now, when the exit happens, it will come and show, okay, you made this money. So you're asking if it's coming in your demat account, what happens when I sell? You will not get to sell it before that call from that exit actually happens. So when the exit happens from the platform, the share will get transferred to the owners or whoever is the next set of buyers. You will get this money coming into your account. Your accountant, when filing returns for that year, will ask, where did this money come from? You will say, it was this startup that I put money. Now it's coming for this.
Yeah. So in other words, like whatever QDS had these, right? We are declaring today saying that we own in very owner, right? We declare that we own these many shares. Like that. Now,
that's right.
So we have to do this for whatever 15 startups that we are going to put. For each of them, we are getting so many shares of that company. All that has to be listed. Okay.
Absolutely.
Okay.
Because anyways, we will have to pay capital gains, right? If we receive the money, because you've already mentioned that.
Okay. Unfortunately, we are in a country, I wish we were in Singapore, where you don't have to pay for capital gains. But we are in a country that has done cut, copy, paste of the US and the UK taxation system. So, yes. All right. Ladies and gentlemen, I think we're done with the questions. Unless there is more, you all can be. But please get your videos on for one last time. Okay. For all of you who are still on this call, and those of you who were right from the start of the call, I am sorry. I had to get my tone at a very stern level, because that's not how I have addressed you all in a group gathering. But that is not the intent. The intent was just to make sure the gravity and seriousness of this kind of investment should be considered, and we cannot afford to be passive investors, or, what's the word I'm looking for? Casual about it, right? I do not want, after you put your money, saying that this is hard-earned money, I've paid, taxed money and all of that. Make that decision before you step in. But once you stepped in, let's make sure, like we are parents raising children, that it's complete our responsibility, irrespective of how the children behave or how the world behaves around the children. So with that said, if there's no questions, we can call a...
No, actually, I have fun said to what you said, right? See, so you are saying you have to be diligent only at the time of investment, right? Not that you have to see through. Passive means it's not that you have to see how that company is doing. I agree, right? You yourself you said that you are not going to attend the quarterly calls. So I'm hoping that after you decided to put the money, then after that you don't have to get involved, right? That's my understanding.
I'm being very crude about it, Funny. Like I told you all, when you remember the very first day when you came to invest mutual funds with me, this was a long time back, right? Yeah. And what returns did I tell you? 12%. Look at your investment portfolio. Is there funds which you've been invested for more than 5 years, staying less than 15%? Absolutely not, except Nippon Wealth Creation Fund, which have already planned the exit. I will always undercommit, so that we've got the commit. And this, because I know few of us are there on other platforms that we invested, which has not given us the results that we're looking for. I want us to completely get off the emotion that, okay, if Sharath is presenting this, there will be no way that we lose our money. Thank you for bringing that up, Funny. Anything else, ladies and gentlemen?
Isn't piggybacking close to passive investing?
It is. And as long as you're clear about it, then don't come to me and say, Sharath, now what do we do? Because every time when you've invested in mutual funds or any other instrument with me, I have proactively tried to reach out to you. There could be times where, there have been personal issues or whatever. I'm admitting it's not been 100%. But majority of the time, if there is anything that is demanding according to your finances, I will not be generating news headlines like your reporters, financial influencers who are concerned about getting one more subscription on their blogs or on their channel. If there is something meaningful that you can take advantage of, you will proactively hear from me. And if you have said that I'm going to piggyback, okay, Sharath, this is it. I'm liking, but don't now start writing a thesis around why I'm trying to give you that, because then that doesn't make sense. So we take the decision course, that course and at the start, if you're saying, Sharath, you know what, I love attending all of these beautiful alternate product calls, but I don't have the risk appetite. So be it, be a part of the calls, don't invest. No problem. I do not have targets key, you know, with IPV, I have to clock so many numbers from so many people within this time. Get in when you want to get in, get out. Choose not to get in, depending on what is being told. But after getting in, please don't shoot from my shoulders. Not fair. I mean, it's like you going to the gym, paying top dollar for a financial for a fitness coach, and that fitness coach is doing, but you don't want to get to the gym. You don't want to follow the diet. Now there is a small challenge, right? It's not the fault of the fitness coach. So that's it. I hope the parallel is being drawn. Anything else, ladies and gentlemen? It's a Saturday evening.
Hi,
I'm
Sharath.
surprised that was. Sorry.
Sharath, Leslie here. Yeah.
Hey, Leslie.
Sharath, very quick question. What is the platform fees right now before it escalates to?
It's 21,400 something plus GST. If it after October, it's 25,000.
Thank you.
Leslie, since you're on the call, I don't want to put you in the spotlight, but do you want to introduce yourself? I mean, what is it that you do?
Oh, was that done? Sorry, at the beginning of the call?
No, it was not done, but I see that there could be an advantage. Okay. Folks could benefit from what you do. So unless I'm putting you on the spot.
No, that's fine. Hi everyone. My name is Leslie. I'm a second generation family business entrepreneur. We are developing about 200 acres at the foot of Nandi Hills, and into we're looking at building a mini city of sorts. So we're looking at senior living, resorts, plots, villas, alternate incomes, through real estate. So that's what I do. And I've had the privilege of working with Sharath for, I think about moving into the second year. Yeah, okay. I'm just saying, Kavita, I'm envious of you to have been journeying with Sharath for, I think, 11 years now. I wish I met him back then. I would have, started my portfolio. I mean, my family's only believed in real estate. We've not done anything apart from real estate, not even gold. And
I'm sure quite a few other people would like to trade places with you. Yeah, when you sing 200 acres, then you're like,
Leslie, I'm envious too to have a 200 acres plot, right? I don't mind having that actually.
No,
okay,
I'm
you know
talking
what?
about,
I will drop off because now it will go completely. Okay, you know what? I think let's do an equivalent kind of partnership, and let's put Sharath on. Leslie, thank you.
No,
I didn't mean to put
thank
you
you
on the spot.
No problem. But Sharath, thank you. I'm really grateful that you're doing this for us.
Have a lovely weekend. I'll talk to you all when we talk next.